In this video, guys, we're going to look at 4 useful chart patterns that are handy in bear markets or even heavy downtrending environments. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so 4 chart patterns that you can use to try to time your shorts a little bit better in those heavy down markets, so a bear market or something that's got a lot of downward pressure, a downtrending market. The other way of using these is to exit long positions. Sometimes we forget that a bullish pattern can be used to exit a short position, or a bearish pattern can be used to exit a long. So if you're already in a long, for whatever reason, maybe trading a mean reversion trade, a little scalp off the low, whatever it may be, and then you see one of these bearish patterns, you don't necessarily have to go short. It could be a trigger for you to say, right, that's the time to cover my longs, use that as an exit criteria. So different ways of looking at things. All right, so let's get right down to it. So the first one, guys, is the pullback to support trade. I like this kind of trade because it's very classical, very simple, and very effective. And the theory behind this is we have a support level drawn in for whatever reason. I don't need to go into the details about how we draw support and resistance. If you want to check that stuff out, I've got loads of topics about that in the library, so go and check it out, guys. But we break the support, the pressure is lower, the pressure is constantly pounding on that support, it breaks, and then we get a little bit of a breather as price just starts to come back up, retests it, support flips into resistance. And then when it fails and it starts to roll again, that's when we can initiate the short trade. And the beauty of this kind of thing is that we can have a stop above the high. And I like any setup or pattern that really gives me a quantifiable risk. I don't like patterns so much that really don't have a definitive place that goes, hey, you're wrong. You know, this is the X, this is the wrong trade to take. I like when I can have a pattern that I can very clearly go, right, my stop is obviously there. Now I have to work out how I can fine tune my entry for the best possible risk reward ratio and all that kind of stuff. So good one, that pullback to support. Number 2 is the bearish engulfing or the outside day. Now, bearish engulfing traditionally is going to be when the market gaps. So if you're trading FX, outside day is just as good. But what we're looking for here, guys, is when the whole of the body, if we're bearish engulfing, is engulfing the prior day's range. So this candle here would be the bearish engulfing. So you have the prior day's trade like this, and the bearish engulfing would be this. So in other words, it's gapped above the high, and then it's come down and it's closed below the low. An outside day would be the same kind of thing. Doesn't matter about the body, it just means that the high is above the high and the low is above the low. So very similar. You just don't get the bearish engulfings too much in FX, obviously, because of the gap issue. But either way, what you want to see is something that's completely encompassing the prior day's range, and that is a really good bearish sign, because it's basically saying, not only is it bearish, the fact that and obviously the better is, just final thing, guys, it's better the lower you can close. So in theory, if you're having an outside day, this would be your better type of trade. So that it's tested the high, but it's still closed at lows, and that was red. That would be the perfect one. But anyway, the point is it's tested highs, hasn't found buyers, has ultimately reversed, and then it's also tested lows. And like I say, even better, bearish engulfing can close below the low. It can close below the low with just the outside there as well. That's perfect, because it's just showing you a little bit of giving you a little idea of what's happened. You know, you've gone to new highs, you've sort of advertised for fresh price, haven't really found the buyers they wanted, rolled over, come back and closed at lows, preferably saying, okay, we might be able to initiate a short position. And again, like with all these trades, I like to be able to just then go, right, simply put, there's my stop above there. It's very, very clear cut. If it's a classical pattern here of a bearish engulfing an outside day, we shouldn't retest that high by too much. So a little bit above it, very simple. And now I can decide whether I'm going to initiate my short position on the close of the day, which is the classic way to do it, or am I going to try and be a little bit more clever and look intraday as it's starting to form? If you're a day trader, that's one for you. Maybe you've got some sort of trigger intraday. You can look on a higher time frame and go, right, this is a bearish engulfing, this is an outside day. How can I now drill down onto my 15 or 5 and get a better entry to it? That's one way of doing it. Or, you know, you can just have it as a almost filtering criteria and go, okay, now I'm looking for a short. Maybe I want to see a dip lower and a pullback type thing. Or maybe I can mix and match these two together. Okay, guys, number 3 is the double top. Classical one again, but using the right environment, it's lovely, especially when we start to blend these things. So, pullback to support. Imagine if you had a double top on a pullback to support. Not only have you got the double top, you've got the support that's now turned into resistance as well. So same kind of thing, you're looking for a pushback up that fails. It doesn't break the high, or it does slightly. I like the ones that break slightly, those are my favorite. Just breaks that high slightly, then just starts to roll back over again. And as with all these, your obvious place for a stop is going to be just above that high. So double top holds, that's the thesis of the trade. It's not going to take out the high again. Nice little trade set up that, especially when you've got a downtrend, especially when you start to blend it with these kind of things as well, guys. It's worked well. Okay, one for the day traders, all the swing traders as well, but the green to red move. So green being, okay, let's say this is the prior day's close, and regardless whether you've got a gap or not, it's irrelevant. You've got a nice up day, good, strong, solid up day, and then for whatever reason, the sentiment changes and you get a good reversal. Now, that's what it looks like on an intraday chart. Might be going to be completely different looking on a daily chart. Is going to look more like that, isn't it? So you're going to have this sort of scenario. So, but in the day, this isn't so relevant. What we're interested in is the fact that it has been positive and then it's gone negative. So it's very much in reference to the prior day's close, depending on what chart time frame you're trading. But if you're trading it on a daily chart, it's going to be the green day is going to be reference to the prior day's close, right? So you can't just take a candle in isolation, because the candle doesn't tell you how it is relevant or relative to, let's say, to the prior day, is it? Because the color is just based on the open and close difference. Anyways, by the by, green to red is we're moving up, we're seeing strength, seeing buyers. Oh no, no buyers, reversing hard and closing red. And the idea of that is, guys, at the end of the day, for swing trading, you're initiating your short position there. Bit of a wide stop, sometimes you've got to have it above that high. Or if you're a day trader, as it's starting to come through the gap level here, maybe you get, again, this is where we start to blend things, you get the pullback to support type trade, which may well be the gap. Oh, sorry, may well be the yesterday prior day's close. So as it comes lower, pushes back up, you may well get a little double top, like you do here. So you start to blend these together, you start to get some decent patterns that work well in down markets or bear markets. All right, guys, those are 4 useful chart patterns for down markets, bear markets, downtrends. Hope you like it. Thumbs up if you do, and don't forget to check out our channel sponsor, link in the description below. Take care, guys, bye-bye.